big accretive transaction to our shareholders. We sold 70% of our general insurance business to Zurich Insurance for a total of 5,560 crores. The compounded growth rate of the investment over the time that we built this business would have been over 45%. Like I've always maintained, we will continue to evaluate our business from the eyes of the shareholder and what returns it can generate. This transaction not only demonstrates the value of our subsidiaries, both in terms of embedded value as well as the growth in value year on year on year. The other parts of the business continue to do exceptionally well, like I've talked about, and the results kind of show. Of course, Devang will take you through the numbers in greater detail. Point number 2, regulatory confidence and remediation progress. As you all well know, and we talked about it in the last quarter results, the RBI order relating to our technology platform had quite an impact. We talked in the last quarter that it essentially has 3 impacts. One is a temporary disruption where we go from digital journeys to physically assisted journeys. 2, on our 811 business, and 3, in our credit card business. First things first, from a technology perspective, we have made significant progress during the quarter.
Recording in progress.
We have made significant progress during the quarter. In consultation with the RBI, we put together a comprehensive plan to fix all outstanding issues. We have beefed up the internal team with resources from Accenture, Infosys, Oracle, and Cisco, and focused on relentless execution. I feel very comfortable and good as to where we are today. Still more work to be done, but very good progress. We have also appointed GT Bharat as our external auditors with the approval of the RBI, and they have already commenced their work. Needless to say, we are in constant communication with our regulators and keep them updated on all developments. As far as the business is concerned, obviously, it has had a muted impact on growth in our credit card business and in our personal loan business. Our 811 business, while it has a muted impact on new acquisitions, the 811 team has done a fantastic job in deepening relationship with its customers. 3, we laid out a strategy, and I talked a lot about it in the annual report, where we talked about fundamentally transforming for scale. And in transforming for scale, we said we're going to put the customer at the center of everything that we do. We have taken a lot of actions in this regard, and the 2 big initiatives obviously have been the One Kotak agenda. You've seen the power of our subsidiaries and how we get the subsidiaries to work together so as to deliver and meet the needs of our customers holistically. And 2, we recently have announced the reorganization of the distribution channel, where we are saying we want to bring together all the ways in which the customer interacts with us so that we are able to provide the customer an omni-channel, resilient, and seamless kind of interaction. Where we stand at Q1, I feel confident that we will continue to deliver for our customers and our shareholders. We are in a good position with a good platform, and the future ahead of us is quite bright. With that, let me hand over to Devang to take us through the numbers in detail.
Thank you, Ashok, and good afternoon and welcome all to the Q1 result call. Just taking from Ashok on the Zurich transaction, there are 2 areas which have impacted the Q1 financial statement, and I would like to elaborate upfront. First one, as Ashok said about the Zurich transaction, the above transaction has resulted in an increase in consolidated profit after tax by 3,013 crore and in bank standalone profit after tax by 2,730 crores. So there are 2 separate effects. One in the consolidated result of 3,013 crore and in the bank PAT standalone 2730 crores. The second area which impacted the Q1 results is the implementation of the RBI master direction on investment valuation, which has been implemented by the bank with effect from 1st April. This has also resulted in a post-tax gain of 3,414 crores. This is, of course, just the increase in reserve. This is not impacting the profit of the bank, but the reserves of the bank have increased by 3,414 crore as based on the valuation as at 30th June 2024 for the relevant securities. So two important matters, just to clear it upfront so that the results can be seen in the right perspective. Now I come to the consolidated results of the bank at a glance. Consolidated PAT, as I said, is 7,448 crore, up 79% YOY. However, if we exclude the impact of the divestment of Zurich sale effect, the consolidated PAT for the quarter is 4,435 crores. At the consolidated level, the ROA for Q1 on an annualized basis is 3.87 crore. After removing the effect of the Zurich sale, the ROA stands at 2.30%. At a consolidated ROE for the Q1, again annualized, is 22.04. Without excluding the divestment stake of Kotak General Insurance sale, it is 13.12%. Consolidated capital adequacy under Basel III at 30th June is 22.8%, with CET ratio is 21.9, including the unaudited profits. Consolidated net worth for the group at 30th June is 1,41,165 crore, including the effect of the RBI circular of 3,414 crores. The book value per share is 710 rupees after considering the impact of RBI as well as the Zurich transaction. Consolidated customer assets, which comprises of advances, including IBPC and BRDS, as well as the credit substitutes, grew to 494,105 crores, 4,94,105 crores, up 22% on a YOY basis. Total assets under the management at 30th June were 6,36,311 crores, up 36% YOY basis. Now I come to the performance of the bank standalone entity. Bank PAT for Q1 25 stood at 6,250 crores, up 81% YOY. However, excluding the Zurich transaction, the PAT is 3,520 crores. Net interest income for Q1 increased to 6,842 crores, up 10% on a YOY basis. Net interest margin of the bank is 5.02% for the quarter Q1 25. Fees and services for Q1 continue to show robust growth, increased to 2,240 crores, up 23% on a YOY basis. Bank had a total customer base of 5.1 crore customers at 30th June 2024. Advances, including IBPC and BRDS, increased 20% YOY to 4,05,957 crore at 30th June 2024. Average total deposits show a growth of 21% and stood at 435,603 crores and 7% QOQ. CASA ratio at 30th June 2024 was 43.4%. As at 30th June, gross NPA ratio for the bank was 1.39% and net NPA ratio stood at 0.35%. Capital adequacy for the standalone bank under Basel III at June was 22.4%, in which CET1 itself 21.3%, including the unaudited profits for the quarter. Standalone ROA for the bank on an annualized basis is 4.22%. After excluding the gain on divestment of KGI transaction, it is 2.38%. Now I come to the performance of the key subsidiaries. As Ashok said, the capital market subsidiaries continues to perform well and increase its contribution to the group profit. Kotak Securities PAT increased to rupees 400 crores, up 83% YOY with the growth in the market volume. Kotak AMC PAT also increased to rupees 175 crore, up 65% on a YOY basis, with increased equity average AUM to 2,68,567 crore, a growth 61% YOY in the average equity volume. Kotak investment profits increased by 35% on a YOY basis to rupees 138 crore, primarily with the increase in the advances. BSS Microfinance business, which is a correspondent entity, ended the quarter with a PAT of 50 crores. The profit got impacted by lower disbursement, higher OPEX on the branch expansion, and some bit of delinquencies in the certain geographies it operates. With this, I conclude the overview of the consolidated and the bank standalone profit and hand over to Prasanna for Q&A. Thank you.
Thank you, Devang. We will, of course, start with the Q&A session. But before we do that, some notes again. Questions will be taken on a first-come basis. If you have a question, please use the raise hand feature on Zoom. You'll see that at the bottom of your screen. Once I call upon you to ask your question, please unmute yourself and pose the question. Please state your name and the organization you represent before asking your question. Do remember to mute yourself once you have asked your question for everyone's convenience. We request that you keep your questions brief and to the point to allow time for as many questions as possible. If you encounter any technical issues during the Q&A session, please reach out to the Kotak PR team or the Weber Shandwick team for assistance. Please note, the chat function will be disabled through this session. Let's begin with the first question, and I'll pass on the mic to Pragati Oberoi from NDTV. Pragati, can you unmute yourself and ask your question, please?
Yes, sir. Thank you so much. Good evening, good afternoon to everyone. I'm Pragati Oberoi from NDTV Profit. I have actually 2 to 3 brief but quick questions. My first question is about you folks appointing GT Bharat for your external audit. I want to understand what is the progress on that audit and when do you expect to submit your report to the regulator on that? That is my first question, and then I'll come to my next 2, one by one.
So, Pragati, let me take that one. So we appointed GT Bharat, obviously in consultation with the RBI. The scope of the audit has been finalized with the RBI. So as we complete all elements of the plan, once the thing is completed internally, we hand it over to GT Bharat. GT Bharat then audits it and submits it to the RBI. The RBI requires that once we do it, there should be a stabilization period, which makes a lot of sense. During the stabilization period and after that, GT Bharat signs off and we hand it over to the RBI. We are not, this is a continuous process. We don't wait for everything to get over, then get GT Bharat, then give it to the RBI. It's a continuous process and the process has already started.
Got it, sir. But what is the timeline that you're looking at as of now for the restart of the business, maybe this quarter, next quarter? Just want clarity on that.
Yeah, so sure, Pragati. We are obviously pushing hard and we've shared some kind of timelines with the RBI. Let's see how it takes. You know, these technology projects, it's hard to bring it down to a defined level of precision. And we are continuously working with the RBI as to when they think that we have made enough progress to let us get back to business as usual. And of course, we are working very closely with them to try and get this done as soon as possible.
Got it, sir. So my second question is about the numbers. I'm seeing a fall in net interest margin in this quarter, especially after it stayed flat for the previous 2 quarters, that is Q3 and Q4. So I want to understand what weighed on your net interest margin and what is the guidance going ahead. That is my second, and my one final quick question I will come up after I get the answer to this one. Thank you so much.
Demanding customer.
Let me take that question.
Yeah.
Sorry, sir. What?
I said you're a demanding customer, but let Devang answer your question.
It would be really helpful actually in understanding that.
Sure.
Of course.
Thank you so
Devang, go
much.
ahead.
Thanks.
So on the NIM part, I just want to correct yourself. See that December quarter NIM was 5.22%. Actually, it increased during the March quarter to 5.28. And for the current quarter, it is 5.02. So the way to perhaps look at it is that it is from December 522 to 5.02. It's about 20 bips lower over 2 quarters. The reason I say this is because in March, we had a Sonata transaction towards the year end, which added to a increase in the yield and increase in the NIM, which otherwise ideally should have fallen because, as you know, the deposits challenge continues right from the last 3 quarters. So actually the Q4 NIMs were slightly impacted by some one-off transactions. Obviously, the continuing challenges in the low-cost deposit has put pressure on the cost of fund. So it continues to impact the NIM. As well as, during this quarter, especially with the RBI IT embargo, there was an impact on the high-yield unsecured book. So, for example, we could not do credit card, new issuance. That also impacted the yield on the advances. Plus, we had some liquidity towards the beginning of this quarter, which got deployed at a slightly lower yield assets. All this put together, the NIM actually declined over 20 bips over the last 2 quarters. Thank you.
Thank you, Devang. Pragati,
Okay,
I'd like to
understood.
move on to the next question. Please
Sure,
come back to you,
Prasad,
Pragati.
Sure, thank you.
Thank you. Anurag, can you please unmute yourself and ask your question, please?
Yes, thank you, sir. In the start of your address, you said that power of your subsidiary and this Zurich transition. And can we see that in your life insurance business also some sort of transition, or you will wait for the new reforms in insurance sector, which is government is planning for Insurance Act amendment, and thereafter you will wait till that point?
No, Shanti, do you mind dealing with Anurag's question?
So, Anurag, let me just address that. And let me just step back for a minute on the Zurich transaction. For the last 8 years, we have been building a strong business on the GI side, but largely focused on retail. The general insurance business also has a very strong commercial side, which we were not present in. And what Zurich brings to the table is a very strong commercial business. It needs a different level of technical skills and underwriting. And we realized that we need a strong partner in this business. So the way we saw it is that, we saw a lot of value in the transaction. We continue to remain distributors and still hold a 30% stake. So there was a strategic reason when we saw that, because we knew that unless we have a strong commercial business, you're not going to be able to grow and be within the top 5 names. On the life insurance side, it's largely about distribution and asset management. Both are traditional strongholds as far as Kotak is concerned. And if you may recall, we actually bought out our partner's Old Mutual stake. When we started the business, we had a overseas partner, Old Mutual, one of the respected global insurance companies. And we actually bought back the stake because we believe both distribution and asset management are strongholds. And so we continue to build the business.
No, ma'am, but you have sold around 70%, which is the highest ever FDI transaction. Means the specialized you could have got in a lesser only, but you have sold around 70%.
So that is what I said. For us, the way we saw it is that where the business is and where we believe Zurich can get and build value, we gain as a shareholder, we gain as a partner, and we gain as a distributor. So it made sense.
Thank you, Shanti. Thank you, Anurag. We'll move on to Hamsini. Hamsini from Money Control. Again, I'll request everyone to keep it to 1 question. We'll come back for more, but this will allow everyone to ask a question, please. Hamsini?
Thank you, Prasanna. I have a couple of questions on the numbers. A few points here. Both Sonata as well as BSS. BSS has shown a decline in PAT. Sonata, again, there is another quarter of loss post-consolidation. I'd like to understand whether you are voluntarily pulling back some part of growth in the MFI space given the kind of commentary that we're hearing from the field, and that is what led to BSS decline. And any specific reason for provisioning costs have gone up over 50% on a YOY basis this quarter? And I think that also had an impact on the PAT. 2% PAT growth is the lowest we've seen in many, many years from Kotak, many quarters from Kotak. These two, I have a small clarification to make on cost to income. Prasanna, please allow me for that. I'll ask it once I'm done with these two, ma'am.
Okay. So I'll answer the question on BSS and Sonata, what you asked. So yes, you are right that BSS profit over YOY fell from 95 crores to 50 crore. That is correct. Now, the reason, I think we are seeing some sign of delinquency increase in some of the states and geographies, where we have pulled off and we are lowering our disbursement there. So that's the reason why it is held.
Would it be possible for you to name some, sir, so that we get a little more clarity on the market?
I think these are the states, I think across South and North India, I think there are 3 states which are there where we are seeing increase in delinquencies. I think, but there is also, if you see, the BSS has built up a very strong branch network of 150 branches they did over last 1 year. The OPEX cost of that also has come into the balance sheet. And I think despite all of this, do keep in mind, BSS has a net worth of 1,050 crores. So yes, while we are seeing and we are taking corrective action as we progress and navigate, but it is still in a very, very sound position. So that